Are we live? Can you hear me okay? Let me know if you can in the chat, please. I think we're okay. I was having some technical difficulties right until live time. I was under the desk trying to fix things. I think it's okay. Hopefully you can hear me. Welcome everybody. It's Thursday, September the 18th. It's the Financial Thing live stream. I'm back. I took a few weeks off. Apologies, whatever. It is what it is. Sometimes you just don't feel like you have anything to talk about. And I was feeling like I needed a bit of time off, so I took some time off. But here we are. Back to it. Back to investing. Back to the rather mundane world at the moment of peer-to-peer lending. So hope you are all having a wonderful week. It is Thursday. Thank goodness. Thank goodness. Yes, I'm feeling better. Good. I'm glad everything is loud and clear. Yeah, I'm feeling better. I don't know how I was feeling. I was trying to brainstorm some ways of maybe, creating different types of content for the stream, what I was going to talk about. Peer-to-peer lending has just become a little bit quiet. And, I'm going to show you an example of why this is happening. Let me turn the brightness up on the screen. So anyways, you can see outside, it is a very balmy and overcast 80, I think it's about 85, 86 degrees Fahrenheit. I have no idea what that is in centigrade for all you smart people out there. You'll probably know. But they need to get out there and cut that overgrowth. The taxpayers' money is not being spent wisely. Anyway. I digress. So we're back. Anyways, big announcement. I need to check out the date, but sometime in October, I got a very special guest for you. And I've been trying to get this guy on the stream for a couple of years now, and I reached out to him again and said, come on the stream. I'm bugging you again. He agreed to do it. So he's going to be coming live from Germany. We're going to have Mr. Neil Faulkner from Fourth Way here, which is it's going to be an interesting talk. So yeah, Fourth Way will be live. Let me look at the date because I can't remember. I didn't put it in my calendar. Hold on. I'm going to tell you what the date is. October 16th, 7:30 p.m. UK time. October 16th. Yep, Neil Faulkner from Fourth Way. It's going to be here live, so put that on your calendars and tune in, bring your questions. We're going to talk about peer-to-peer lending. I'm going to ask Neil what his thoughts are about how I think the peer-to-peer lending space has gotten pretty stagnant and what he feels about that, because that's his business, right? So anyway, yeah, October 16th, 7:30 p.m. UK time. Come join. Also had a very interesting conversation with LoanPad a few days ago. We're going to organize to get Louis from LoanPad back here live again too. I always love talking to Louis. I like what his business is doing. Interest rates have dropped a little bit at LoanPad. We're now down to 6% and 5%. So 6% in the preferred, 5% in the quick access account. Looking a little peaky, isn't it, at 5%? But interest rates, of course, have been falling. So to bring it in line with competitive rates, LoanPad has to do that and adjust their rates. Anyway, give the stream a thumbs up. If you're enjoying seeing me back here again, please hit that thumbs up. I appreciate you. Subscribe to the channel, all that good stuff. Tell your friends and family, blah, blah, blah. What are we going to talk about today? We are going to talk about some cufflink news that I've been getting emailed about a lot. And by the way, thank you to everybody who reached out while I was away for a few weeks and said, are you okay? We haven't seen you online much. And I said, yes, I'm good. So thank you very much. Sincerely, it's very kind of you guys to reach out and check on me, make sure that I'm still breathing. I am. Sometimes. Barely. Yes, anyway. Yeah, we're going to talk about Cufflink, some changes to their terms and conditions, which incidentally has happened earlier than I spotted. So talk about that. Talk about some other peer-to-peer lending things. I did get a question from somebody on the email. I forgot to screenshot it, but it said to me that they only have enough money to invest in one peer-to-peer loan company. What would I recommend? So I'll talk about that. Not financial advice, of course, as none of this is. It's purely entertainment. We're going to talk about the stock market. We're going to look at the Trading 212 portfolio. We're going to do some Bitcoin chat. We're going to talk about the Fed, U.S. cutting interest rates, a strong arm tactic by the Mr. T orange hair administration to put some strong arming into reduction of interest rates to move the economy along. We'll chat a little bit about that. Anyway, quick hi to everybody in the stream. Invest24 is here. Hope you're feeling better too, Invest24. Paul Bagworth and Kenilworth, nice to see you again. Dave Dawson is here. Peter Vince from Leatherhead. Mike Powell is here. SG1009. Peter Vince saying 29.5% centigrade is the temperature in Orlando, Florida. Very good. You're a lot smarter than I am. Let's get right into it. We're going to take a quick look. Since I did have a chat with LoanPad, let's have a look at LoanPad stats to see how things are progressing over there. Hopefully you can see this. Well, let me check the setup. It's been a while. Yeah, it looks pretty good. Okay, 216.6 million pounds of total loan value, 221.1 million pounds of LoanPad loans. So it's kind of, again, been a little stagnant, I would say, with their growth. I think their experience, what I'm seeing out there, the peer-to-peer lending is a bit stagnant at the moment, but they still offer a good product, I think, in my opinion. Average loan to value 44.9%, crept up a little bit. Total live number of new total loans 272 loans, and we have 6,283 total lenders, and now 21 different lending partners with 1,020 total of LoanPad loans since inception, and 748 of those have been paid back. So great statistics. You still have less than 1 day estimated time to sell, less than 1 day estimated time to invest. It's just a very, very slow and steady way of investing in peer-to-peer lending. You want a non-hassle. You don't have to really mess with your investment. You put it in there, you set it and forget it, and collect interest daily. I myself have money inside this company, inside of their loans. I don't just talk about things that I don't invest in myself. I'll show you how much I have. For full disclosure, look at that. Those are all my loans right there. And yeah, close to 10,500 pounds invested in LoanPad. So this is, I put my money where my mouth is with this company. Do I know what the future holds? Absolutely not. But I do have enough good feeling about them there. I'll put my own cash in there, and that's not an insignificant amount of money, maybe to you, but not to me. See, premium account 6%, class account 5%. This is not a paid ad read or anything like this. Just I put my money in there. I think it's a good product. Haven't had any red flags at all on this at the moment, so good to see. We'll talk a little bit about the news. Look at this. Relendex has announced a £15 million partnership with the British Business Bank, Triple B. Do you know Triple B in America is the Better Business Bureau, but in England it is the British Business Bank. So they are partnering with the British Business Bank to support Schmedium enterprises, Schmedium, the house building sector. The British Business Bank has committed £15 million, which will be managed by Farringdon Portfolio Limited, and an appointed representative of Relendex. Under the new partnership, the British Business Bank will invest up to 25% in every eligible loan to small and medium enterprise house builders and developers on equal terms with other Relendex investors. Relendex said that this co-investment framework will significantly strengthen its capacity to provide tailored, flexible finance to SME house builders, helping to drive growth across the UK housing sector. Today, Relendex has originated around £200 million in loans and anticipates rapid expansion over the next few years. They are very proud to be working with the British Business Bank. And I'll tell you what, I talk sometimes about the stagnant growth in peer-to-peer lending. I just don't see much of it. This is a really, really positive piece of news that the British Business Bank says, we think Relendex is a solid business. We're going to give them £15 million to invest in these peer-to-peer lending loans. Now, what's very interesting about that is all of these risk warnings that every peer-to-peer lending company has, including here, a loan pad, don't invest unless you're prepared to lose money. This is a high-risk investment. And by the way, these types of warnings here are what is really making the peer-to-peer sector stagnant, and people read these warnings and they say, oh my God, I'm going to lose all my money. I can't invest in peer-to-peer lending loans. But yet, the British Business Bank has enough faith in a company like Relendex where they're going to commit up to 25% in every eligible loan. They're going to lend their money alongside people like you and me. So it's kind of a bit of a conflicting message, isn't it? If you think about the FCA saying peer-to-peer is, we're gonna group it with cryptocurrency, which I don't agree with at all. I think cryptocurrency is very, very risky. Not so much Bitcoin, but the rest of cryptocurrency, absolutely risky. But they're grouping it in with that, and then the British Business Bank is saying, well, obviously it's not that risky, because if it was, we wouldn't be putting £15 million of the BBB's money into peer-to-peer lending loans. So very, very conflicting message. But I think the thing is that is going to make peer-to-peer grow is news stories like this being public. And is it public? No. Your average person, your average Joe punter on the street is never going to see this news article to know that peer-to-peer lending even exists. This is the challenge that it is with peer-to-peer lending. And you know how I said, well, I've been away for a while because the news is slow. I combed through the Alternative Credit Investor pages about 3 or 4 weeks of news stories and could barely find anything about peer-to-peer lending aside of that Relendex article. And then this was another piece of news. And is this news? I don't know. This is really important news. But Folk2Folk hires a relationship manager. This is what's making the front page of Alternative Credit Investor when it comes to peer-to-peer lending. So you tell me, is peer-to-peer stagnant? So they hired Tracy Gott as a relationship manager. She brings 30 years of experience into financial services. Do you care about this? Probably not. But there's nothing really more to talk about. Let's move on. Speaking of Folk2Folk, this is a partnership article, which means it's a paid ad. But this says why Folk2Folk spoke up for the Innovative Finance ISA. They went to bat for you, the people. They spoke up and said, hey, we want the IFISA in national conversations and stop focusing on cash and stocks and shares ISAs. We want you to focus on IFISA and peer-to-peer lending. Were they getting a response from the, when they spoke out about this to the government? Nope. There was no response. But they did speak out. So good for them for doing that. I do like Folk2Folk. There's Ray Warren. He, of course, was on the stream before. Go check it out. And also, speaking of peer-to-peer stagnancy, peer-to-peer lending stagnancy, I went to ChatGPT and I said, give me an idea. Give me something. Find me an interesting news story on UK peer-to-peer lending. And what it came up with was just old news. January 2025. February of 2024. Talking about Zopa. It's not really, really interesting stuff. So I want to see some innovation in the industry. I want to see some news stories saying there's a new business coming to town. We're going to have some innovation. It's just not there at the moment. Is peer-to-peer lending bad? Not necessarily. It's just not in the spotlight. Will it be? I don't know. We'll see. What do you think? Do you think it's stagnant at the moment? Do you think peer-to-peer is going to see a golden age? Peer-to-peer lending? And then we get news stories like that. I got a letter from the mailbag. I have a couple of letters I want to read to you, but this one is very pertinent. Hang on one second. I forwarded this to myself. Here we go. Did you see the cufflink changes? I'm concerned about this. Any thoughts? I'm considered drawing down from this platform. Is cufflink still on your top 5 list? Phil. Yes, thank you. I got a lot of emails about this cufflink terms and conditions change. Some people are obviously very concerned about this. And I would say, let me just go through this and I'll tell you, what my thoughts and feelings are about it. Important updates to your investor terms and conditions with cufflink. Of course, cufflink. Things have changed over there. Narinder is gone. He's moved on to greener pastures. And then we get this update to terms and conditions. Summary of key changes. These are important changes. And I'm glad that they put this up. Because they didn't have to put this up, right? They could have just changed the terms and conditions and not told you about it, because they do that before. In fact, they changed one of the important points in this terms and conditions, I think earlier on in the year, that a few savvy people spotted. I didn't hear anything about it. But here's the points. Cufflink will no longer cover any losses to investors using its own funds. In the past, we had the discretion to use company funds to help cover losses. This is no longer available. Cufflink will no longer take up to 5% of capital invested as first loss for all future investments. Interest is only paid if the borrower paid. We've removed interest top-ups or internal subsidies. If you have selected to compound your interest, you will continue to accrue throughout the duration of a non-performing loan. Cufflink will now share up to 0.25% collected default interest on a monthly basis to investors on a case-by-case basis. So, Cufflink, let's look at the first point. Cufflink will no longer cover any investor losses using its own funds. This is an interesting change, because it was always discretionary. So they could have kept that term and condition the same and still decided we're not going to cover any investor losses. Why did they make that change? Well, at the end of the day, we don't really know why they made that change. That's the obvious answer. One could speculate there are a lot of loans that may be bubbling in the background that are not doing well, and the company doesn't want to be under scrutiny if the loans turn bad. Don't want people saying, well, why are you not going to cover some of these investor losses? So there's that. I don't know what the answer is. I don't have that insider information to the reason. I will try to find out. I'm going to reach out to my Cufflink contacts and say, why did you guys make this? Why do you make these changes? I actually would like to get the new CEO on the stream. So I'm going to send out an invite. I was just waiting a few months for him to settle in, but I'd like to know why. Cufflink will no longer take up to 5% of the capital invested as first loss for all future investments. Again, why did they do that? Maybe they don't have the capital. Maybe they don't have 5% to put into loans. My theory, too, on this is maybe the FCA has said it's kind of a conflict of interest, even though I'm not sure why they would care if the company wanted to invest a small percentage of capital as first loss. But, theories are they just don't want to put money into their own loans anymore. Does that mean the loans are no good? That they don't have confidence in them? I don't think so. Because, look, if Cufflink writes a bunch of bad loans like Assets Capital did, they lose their investors' confidence, and that really is the end of the business. They don't have institutional money. Interest is only paid if the borrower pays. We've removed interest top-ups or internal subsidies. So sometimes when borrowers didn't pay or paid late, Cufflink would still pay you on time. That's not going to happen anymore. This is an interesting one. If you selected to compound your interest, you will continue to accrue through the duration of the performing loan. So that says a performing loan. Question is, what happens if the loan doesn't perform for 2 months and then begins to perform again? Does that money get paid back? I don't know the answer to those questions. Again, it's also, I think this is a good marketing way to get people to compound interest rather than to be paid out more quickly. So you could choose to get paid out every month, or select compounding where your money gets reinvested back in again. So that's a way for Cufflink to say, put your money back into the loans. This last point, Cufflink will now share up to 0.25% collected default interest on a monthly basis to investors on a case-by-case basis. So Cufflink is going to collect additional fees and additional interest if a loan runs late, but they're going to share 0.25% of that. I don't know how much they're collecting. Maybe you guys know. But if they're collecting 5% in fees or loan, extra interest on the default or on back owed interest, they're going to give you 0.25%. Not much. I certainly think some of these things that they're taking away are going to be a bit of a detriment to them as far as pulling in new investors. I think the 5% first loss was a nice advertising thing to attract new customers, but they don't really talk about that anymore. I'm not aware of them taking first losses. And, again, it was discretionary, I think, for investments. They didn't take 5% of every loan. I don't know when the last time they took 5% of the loan was. I know there are loans that they have done that in the past. But I think that was a good marketing point. Cufflink is not going to be able to claim now that no investor has lost money, because I'm sure some of these loans which will go bad in the future, some people are going to lose money. So that's an interesting removal of that. It's a good advertising, right? It's a good advertising point that they can make, that no investor has lost money, but they're not going to be able to do that anymore unless that's actually a true thing, which I can't imagine it would be true. If a loan defaults, somebody's going to lose money. So it's an interesting point. You can choose to either agree to both of these. You cannot move on unless you agree to both of these points of the changes and acknowledge the risk warning. Even if you don't want to accept the changes above, you still have to check that box to be able to go on. Or you can choose to disagree with changes, exercise your right to close your account once your existing investments mature, which I know some people are doing. So that's really your two options. So I'm going to go ahead and check that later. But there are some interesting views on the peer-to-peer independent forum about this. Now, you can see back here in June 2nd, Will Smith, he spotted it. Look at this. Back on June. Has Cufflink quietly stopped the 5% risk they were taking on new select loans? Update 11th, September 11th. You betcha. I don't know if he... Okay, so Ace down here says they no longer promise to item 21 of their latest terms and conditions dated May 19th. So they took that away. Cufflink's finance number 2 may invest up to 5%. So maybe I'm reading this wrong. Maybe this wasn't back in June. But we do have people that were posting in June that this has been done pretty quietly. So I think they did take that 5% away before it was really disclosed until now in September. So it's an interesting move. And then the general consensus here, I think the feeling that I get from these people is that people are not really liking this. Some people are saying, I'm moving on from Cufflink. Like this guy, Rascal, without giving too much away, I'm down 40% from my peak. People say I'm running down my investments in Cufflink. So, it doesn't inspire confidence in the company itself. Do I think things are going bad in the background? I don't know. I don't know what the answer to that question is. Could be. It could be. I don't have that insider information anymore like I used to. Another question I was asking you is Cufflink still on my top 5 list? I think this changes everything. I think that I think it will probably fall maybe to the bottom of the top 5 list until they can prove the longevity of these changes and whether it's going to affect their business, and to see how the loans are performing long term. I've been winding down some of my investment amounts in Cufflink myself since Narinda left. I don't know. I got a bit of a feeling that, maybe Cufflink is heading in a different direction. And I liked Narendra. I liked him running the company. And now, I don't know. I don't think it's easy to say what's going on back there. I think they still got some good people there, like Harry, Natalie, of course. So maybe another conversation has to be had about what's going on at Cufflink. But it's an interesting change. Nonetheless, look at this. August 12th, P2P lending keeps outperforming other fixed income instruments. This was an article. P2P lending is generating a nominal annual return of between 11% and 12%. This is, I think, European-based robo-cash. So, agreed. I mean, fixed income is, especially with these interest rates dropping, is not going to perform well. You're going to get about 4 to 5% if you're lucky on fixed income. So you can use peer-to-peer lending to negate some of those poor returns. But remember the risk. There is more risk in peer-to-peer lending. Go with a company like LoanPad. You're taking less risk, getting less return, getting 5 to 6%. If you want to get these 11 and 12% rates that RoboCash is saying you can get, you are taking more risk. For a lot of fixed income products, things like government bonds, you're not taking very much risk at all. So just remember that. It's a bit of a misleading story, I think, but it does outperform. And by the way, 5%, 4% looks really, really boring at the moment. It does. I'm going to read you another letter from the mailbox here from a guy named Antonio, and I'm gonna tell on myself too. I'm gonna tell on myself because I've been struggling with the same problem with staying the course and not flipping around. And I think everybody really at some point comes to this, right? It's the shiny new object syndrome. But let me show you this. I'll show you what I'm talking about. Hey Lawrence, I noticed you haven't been live streaming for a while. Hope everything is okay. You'll be back soon. I've been having a tough time staying focused on my investing journey. I've been following your information on buying index tracker funds for the last 5 years. I've done well, but can't help being pulled away from the slow and steady pathway in favor of picking out some individual stocks. There's so much information on the internet now, everybody with their own ideas on how to maximize returns. The question is, how can I stay focused? I love this. Index tracks are boring, LOL. By the way, I'm not sure if this makes any difference, but I'm 29 years old. Appreciate the feedback. If you want to use this question for the stream, please feel free. Best wishes, Antonio. So, yes, index trackers, they are super boring. They are super boring. When things are going, mediocre to poor in the stock market, index trackers make a lot of sense because they're more stable. You're going to see 8, 9, 10, 11, 12% drops in a day on an index tracker, right? You buy an individual stock, you're going to have that problem. But the thing is, the stock market has been roaring and doing really well for about 3 years, and people, they get complacent, and you're absolutely right. On the internet, there is so much information about investing now that people didn't have 20 years ago. Like, log on to Twitter or X, and you're going to see all these people who are recommending high yield ETFs and options trading, stock picking, and it becomes very, very hard to stay focused and look at your index tracker going, wow, I can get 10% a year, but man, if I'd have just invested in Robinhood or Tesla I would have gotten 25% this year. And, index trackers are very much a set and forget product. You buy your index tracker, you don't really need to look at it ever. You could come back in 20 or 30 years and look at it and see that it's likely, judging on history, has gone up. I mean, we could look at the charts, it goes up, but it's boring. And young people especially, even myself, we suffer from attention deficit. We want to check our stock portfolios. We want to see what's going on, and we want that high that the highs bring. And in some cases, like a gambler, we want to feel that pain of a 6% drop in one day. That's the honest truth, and I hear that a lot. Sensible people don't think like that, but this is something I've really been struggling with myself, and looking for a little bit of a rush, looking to try to pick out some individual stocks, trying to beat the markets. And my portfolio I've got a US stock trading account, and it is looking like a complete mess. I've completely veered off track. Again, just being honest, full transparency. I'm a human being, and this is what my portfolio looks like now. It's a complete mess. Is this the right way to do things? Probably not. But this is it. This is the reality. Look at this mess. We got Apple. We've got AMK. We've got Amazon. We've got some high yield ETFs now. Some Bitcoin fund. Robinhood. I got a trading option here on for 2026 on a Bitcoin ETF. Straight gambling. This is just a gamble. I mean, well, maybe not so much, but anyway, we got strategy shares and all these things, QQQI income funds. And then down here we have our index tracker, SCHB. It's a Charles Schwab index tracker. And we have VTI, which is the Vanguard index tracker. So this is what happens when you veer off course, when you're looking for some excitement in your stock portfolio. You're looking for some dividend income. A lot of these things you cannot buy in the UK at the moment, like these high-yield ETFs. These things pay out weekly and monthly. And the prices drop, though, when the dividend comes in some cases. But then you got this, this blocks. This is a Bitcoin dividend play. This 2.5% increase in one day. That shouldn't happen. These things tend to erode when dividends get paid out. But can I tell you that I have the answer to how to stay focused? No, because I have trouble staying focused. And I think, it takes a market downturn to get hit in the gut to say, wow, maybe I invested in something here that, like this Metaplanet, MTPLF, this thing was trading at about $5.60 just a couple of days ago. Look at it now, $3.86. You put enough money into a stock like that and get gut punched. This is a drop in one day, 4.69%. You do that and you get gut punched enough times, maybe that's enough to make you focused. I don't know. I have trouble myself, so I don't have any feedback. All I can tell you is the right way to do it is not to do that. The right way to do it is just to buy index trackers, shove your money in and forget about it and come back, especially when you're 29 years old. You can come back in 30 years, and I promise you that your index tracker is going to set you up nicely if you keep investing. I don't know. I'm having trouble too. And some of these stocks are purely experimental plays too, to see. One idea I had that I came up with was to have a portfolio of high yield dividend ETFs to see over a year how they performed against the index trackers. So that's what I'm running this YMAX, this WPay, ALTI, QQQI, PLTY. These are all high yield index. They're covered call index strategies where people the traders sell options and they collect income for the fund, and that income gets paid out as a dividend. Here we got one on Robinhood and the blocks and the BTCI. So I'm going to see if this works out over the next year, how it performs against just shoving the money in the VTI index tracker and seeing which one comes out in the best. I think I know what's going to happen. I think while the markets are performing well, these high yield ETFs will do fine. And the VTI will do okay too, and maybe you'll make more money in these high yield ETFs. But I think over the long run, putting your money in an index tracker is going to be the easiest thing to do. And you know what else it does? It takes the stress off the shoulders. This kind of stuff is really stressful. Just like the trading 212 portfolio. If I had all of my net worth in that portfolio, say 4 or 5 stocks, I'd be stressing out. I'd be really stressing out. So the index tracker just takes the stress and takes the emotions away. And you have to be able to sit on your hands. And that is a really, really hard to do thing as a human being. And stories like this are coming out, right? Nearly half of U.S. pension savers would invest in private assets. They are looking for higher returns. They don't want index trackers to be all of their portfolio. They want to invest in riskier things. Private asset investing is really, really risky. You know, when we're not talking about investing in things like Apple, we're talking about investing in private investments to get a better return, stuff that is not on the stock market. And even some of the brokerages in the UK are going to offer funds now that will allow you to invest in these private assets. Private assets have no guarantee that they're going to do well, and you probably know very little about what's going on inside of those investments, so definitely be careful. Another thing I will tell you too is stock picking is, you're at a major disadvantage information-wise. Look at this. The Trump administration purchased an $8.9 billion investment of stocks. They bought $8.9 billion of Intel stocks and put it in the U.S. Treasury. Somebody knew that that was going to happen before that happened. And then just a couple of weeks later, NVIDIA invests $5 billion into Intel and the stock rockets. Look at that, 23%. How much is it up in one day? 23.27%. Somebody knew that was going to happen. And Intel, the stock has been getting just hammered over the last 5 years. It's down from $68, and it was all the way down to, look at that, $19. But somebody knew that information somebody knew that information before it happened, both of those things, and profited from that. Same thing with Tesla. Elon Musk buys $1 billion of its shares on Monday, September 15th. He doesn't just wake up one day and go, I'm going to buy $1 billion of Tesla stocks. He's told somebody, he's told the brokerage, somebody knew that this was going to happen, and Tesla stock absolutely went mental. So you're at a major disadvantage. Being able to sit on your hands on that, if you were a Tesla investor, right? Not selling Tesla was a hard thing to do, to sit on your hands. This stock has been doing nothing for the last, look at that, since 2021. Okay, for 4 years, the stock remained pretty much at the same price. You had to sit on your hands as a Tesla investor for 4 years to see this big uptick that we've had in the last week. 21% in the last week. I made a bad decision with this stock too, and the history. Let's see if I can show you. I sold out at $304, half of the Tesla position, right? 304. Now we're up to 423. I think I sold 7 shares at 304. So that cost about 7 times 120. So about $870 US trading mistake. And just from not sitting on the hands. And that's the problem with stock picking. You have to be extremely disciplined. You have to have a lot of conviction in what you're buying. And you have to sit on your hands and do nothing. And that is hard for people when they see all of this information on the internet about trading, what the hot new stock is. And it's human nature to want to jump in and out of things. I do it myself. And it's a problem, and it costs money. Look at this history. I'll show you the history. Going back to right here, Tesla on the 1st of July, I got out of half the position at a loss of £254. So not only did I lose the upside of the 875 or whatever that is in pounds, 600, 700 pounds, I also took a £254 loss. Dumb. And then what did I do? I ended up buying back in to more Tesla shares. Just one share of 422 because I thought, you know what, I made a mistake. And I did the same with strategy. I got a little sick of sitting on my hands and not seeing it do anything, and I sold and then rebought the same day. I thought, you know what, I shouldn't do that. I did rebuy it back again. See, human nature. So I'm telling on myself, this is what you should not do. And this is the problem about being boring when you're investing. You're going to want to do things like that. And the smart people do not do things like that. Anyway, just wanted to tell on myself, don't give me too much of a hard time. I just want to be transparent, because a lot of people write about what the right thing to do is, but they never show the wrong things that they do. I'm showing you some wrong things that I've done. Fed has obviously cut the U.S. interest rates yesterday. It was a big deal. The stock market didn't like it at first, and they said, you know what, we don't care the next day. Things are booming. Maybe it was priced in. They only cut 0.25%. That shows that the economy is weak, and that the U.S. government wants to give the economy a nudge. Housing is really stagnant in the U.S. at the moment. So will that help? I don't think it's going to do much. Money printing will continue. This is an interesting sheet that I found. Top 100 public Bitcoin treasury companies. Wow. Bitcoin is doing its thing again. It's up to 117,000 US dollars for one fairy dust Bitcoin, with Strategy now holding 628,791 Bitcoins in its treasury. What is a treasury company? Treasury company is simply a company that says, you know what, I don't want to hold pounds or yen or US dollars or euros anymore, because inflation is eating away at this cash that we have. We're just going to buy Bitcoin with the money instead, or some of the money, and we're going to make an investment in something that's going to give us a return. And this is not just a U.S. thing. Look at the different countries that are doing this. We got Japan, Canada, Australia, we got the UK. Right here, the Smarter Web company. A lot of different, Korea, Brazil. It's happening all over the country, all over the world. So people are piling into Bitcoin. And look, big announcement here. BlackRock is getting ready to launch finally their ETF, where you are going to get exposure to Bitcoin through an ETF now, as you want to buy a little piece of a share of an ETF. I don't know what the price is going to launch at, but other countries already have this ETF. It's based on spot prices, so whatever Bitcoin is doing, the ETF will move. It's like an index tracker for Bitcoin. I think it provides amazing exposure for anybody who wants to dip their toe in but is not sure about owning actual Bitcoin. And you can get yourself a little bit of exposure for whatever amount you want to put in, whatever amount that ETF is. Some of them, in the US are about 60, 70 US dollars. So probably the BlackRock one is going to be around that same price. I don't know, £50 for an ETF. So you could get £50 worth of Bitcoin exposure. And they actually hold the real Bitcoin. It's not paper Bitcoin. They actually hold it. So I think that's really great. This is the FCA rule change that allowed this, allowing cryptocurrency exchange traded notes. So I'm super excited about this. The FCA is lifting an embargo on crypto exchange traded notes on October the 8th. So I would imagine that this thing will launch probably very soon after October the 8th. And I think it will go up in price because of what Bitcoin is doing. Not financial advice. Now the mailbag question. This is really generic share buying question. Do you think Apple and Tesla are buyers or passes at these high prices? I inherited some money, would like to buy some blue chip shares rather than index trackers. Why? Why is everybody doing this? You're doing the same thing I am. Will I be streaming anytime soon? Thank you, Ollie and Devin. I don't know. I don't know. I'm not a stock analyst. What I can tell you is I look at products I buy. I own Apple everything. The stream is being run on an Apple Mini computer. I have an iPhone. My mother had 2 Apple iPads. She had all of my sisters have iPhones. My cousins, everybody I know owns an iPhone, bar a few people. And then they just released this iPhone 17, which the demand looks like it's going to be very high. People are excited about iPhone 17. They were not about 16. Last year was very quiet when it came to iPhone 16. So I think they're going to have a really, really good year with the products that they've released. The laptops and the iPads and the AirPods and the new phone. And to me, that just, without being too analytical about numbers, they're going to have a good year. The stock's going to go up. Is it going to go up 50%? No, it's not. But I think it's a safe play if you are going to buy stocks. And it makes up a big part of an index tracker. It's like, I think the top 7 make up 20% of what your index tracker is. So if you want exposure, you're already getting it on an index tracker. But if you want to try to beat the markets, sure, Apple's okay. Tesla, I don't know. I have no idea. I know people love their cars. I know people love the self-driving that's going to go out to all these different countries in the world as a subscription price. People are paying $100 a month for the self-driving here in the U.S. Just released in Australia and New Zealand. Elon tarnished his name big time. I think he regretted what he did. Obviously, with the hand gesture was a stupid mistake, and then him going and trying to fix a broken government was unfixable, was a bad mistake. Hurt him. Then he just bought $1 billion of Tesla stock. So obviously he believes in it. Hence the big jump in the price. So do I know what Tesla price is going to be in a year or 2? I have no idea. Do I like the products? Yes. I like the car. It's a great car. So there you go. If you want to just get exposure to Apple and Tesla, just do it in an index tracker. Easiest thing. Look at this. Tim Cook says he's going to invest $600 billion in U.S. manufacturing, creating a domino effect as iPhone pre-orders for the 17th release show strong momentum. Interestingly, another thing about Apple is they just released the iOS 26 if you own an iPhone. It's the new operating system. I get constantly spammed by telemarketers here in the US. I don't know if it's like that in the UK. You could tell me. But every day, at least 7 or 8 phone calls. They're all scam calls. They're all, you owe money to the HMRC. Blah, blah, blah. This is somebody, a debt collector. It's all scams. This new iOS system has cut that out because now if you turn it on inside your iOS, you can make people identify themselves before they can get through to you, which is basically stopped. I have not had one. I've had one spam phone call since I updated the operating system, and it says when you get a call now, this number is being asked to identify themselves before coming through to your call, which obviously will stop it because they're not going to do it. It's all robocall. So Apple is doing some really good things. That's why I like Apple. I own some of it, not a huge amount. I've owned it for, probably 7 years. Because I like the products. The phones are good. Whatever you think. So the answer to that is probably. Do I think they're good buys? I don't know. Apple probably will do well. Tesla, I'm not sure about. But I own it. I own both stocks. So. Trading 212 portfolio. Let's look at the portfolio. See how we're doing. 29,269 pounds with 592 pounds in cash. Things have been rebounding. Let's see. Let's look at the 3 months. So we were at just under 31,000 and we dipped all the way down to 27,755. We are now back up a little bit because the markets have been doing well. Look at this. You want to see slow and steady? Your S&P 500 Vanguard Index ETF fund, 11% in the green. You just put your money and you set it and forget it. Easy. Strategy was down, I think, 10%. So we've come all the way back up. With strategy, you can see here, Bitcoin has been doing well. Strategy, I think, will do well in the future. You have to have major patience. Major patience. You can see strategy was all the way down to, let's see, a week ago. That's a little last month. 319, so back to 350. Very volatile share. But could be one of the most valuable companies in the world next 5 years. We'll see. Nvidia has been doing really well. We're up 73% in the portfolio now. So kind of a no-brainer. AI just is what it is. It's raging. Amazon up 22%, now up to 231. And Tesla, yeah, going from the red, we were all the way down. I think we were down 8% Tesla. Now we're 17.22 in the green. Just sitting on the hands and doing nothing was the answer. Stupidity, selling out, but that's what you do when you try to be creative and stupid on my part. I don't know what this. I don't know if there's a bug in trading 212, but here it says asset allocation. See the proportion of each asset in your portfolio. Oh no, sorry, it's not a bug. I was reading that. I thought that 1.46% down here was saying that's how much is in my portfolio. It's not. It's just showing you in a graphical sense what your portfolio is made up of. So there you go. Pretty much equal Vanguard, Strategy, and NVIDIA, and then smaller proportions of Amazon and Tesla. Yeah, I mean, the portfolio has done well. If I look at the max, we're 409% in the green since, I think it was started in 2000. I can't even remember now the date we started this. Was it 2020? So maybe 5 years ago. So it's definitely outperformed. But I think a lot of that is just pure luck. Nothing to do with skill on my part. So there you go. I think that's everything. I think that's it. Yeah. Okay. Let me get off of this screen. A lot today. A lot to ingest. Take a look at your comments. I'm just really impressed, Peter, that you were able to tell me how to calculate centigrade. Invest24, what would be really useful, Lawrence, would be if you could cover ISAs, SIPs, VCTs, investment trusts, as well as peer-to-peer. Yeah, could do. I mean, what's to really cover though, right? ISA is just a bucket. You just put your money in the bucket and it's tax-free. You get 20,000 a year, UK pounds. Hit that thumbs up if you can. I'd really appreciate it if you like the content. Hit the thumbs up. If you don't like it, hit the thumbs up. VCTs. I think the VCTs aren't they the tax-free investments that you can... Don't they side skip inheritance tax? Companies with growth potential. Yeah. The purpose is to drive investment to companies no one else wants to invest in. Very risky. Yeah, you get a tax break, but kind of risky. But yeah, we could talk about that. Next time we'll talk about those things. Dave says, I think with bond rates being so high, not much to tempt you to take the risk of peer-to-peer. True you. My pal detects the FCA fingers there with cufflink. Certainly could be the case. Phil, why do you think they removed their zero investor losses message from their webpage? Because I don't think they can claim that. Maybe somebody did lose money. Maybe that's why. I mean, that would make sense to me. If an investor lost money, you got to remove that, right? Simple. I don't know. It kind of goes along with the changes in the terms and conditions. If they're taking away the first loss 5%, then you can't really have that as a advertising message anymore. And likely, as an FCA said, hey, we don't want you advertising like that. Prop lender doing a good job. Peter Vince says, I found a problem with cash drag on RoboCash. The loans are very reliable, usually paying back on time, but always the 30-day buyback guarantee is honored. Yeah, if you want to get into the Euro companies, all crypto stocks have jumped today. Hard to keep your cool with stocks and shares. I know. This is the biggest thing, man. It's so difficult. It's so difficult. Yeah, anyway. I hope you enjoyed the content today, this evening. We're coming into the autumn, September, right? Are we actually in autumn? Maybe we're there already. I'm looking forward to some cooler weather. And believe it or not, we have had 0 hurricanes. I'm going to jinx us, touch wood. We have 0 hurricanes this year so far in Florida. So fingers crossed. Back, I would say next week. I can't promise, but keep an eye on the emails. I do announce it prior. And it's good to see you. Have a great week. Enjoy your weekend. That is all I got for you right now. And I'll see you next time. Take care.